Hey, great big world out there. Hey, guess what? I know it's not going to stick. I know it's not going to stay, but it is snowing. I see snow flurries. Oh, yes, it can't be no better than that on a Saturday. Hey, y'all out there, how y'all doing? It's Saturday. It's Saturday. It's Saturday. It's Saturday. Hey, how y'all doing, great big world out there? I have missed y'all so much. Do you know it has been 7 entire days since I've seen y'all? Oh my God. How was your week? Like, how was everything? Like, did you have a productive week? Did you have an okay week? Was your week better than last week? Like, talk to me. How was it going? Did you incorporate some of the things from the show last week? Did you set that mid goal, that 1 year goal, and that 6 month goal? Did you set that? Did you start prioritizing and categorizing your income and your expenses? Like, how did that work for you? What happened this week? And guess what? You may not have had a good week. You may have just said, you know what? This just wasn't my week. This just wasn't for me. It is what it is. That's okay too. I encourage you to feel your feelings because they're real and they matter. What I also encourage you to do is not to stay in that space because that's not a good space for you, right? Why? Because we're better than that. Like, we bounce back. And that's the good thing about us. We get a second opportunity, we get a second chance, especially when it comes to finances. So, let's shake it out because it's snowing and it's Saturday. Hey, and you with me? Like, where else would you want to be? Like, seriously, where else would you want to be? Yes. And I'm going to keep saying that. Why? Because I don't know no place you should be but with me, right? Okay. So, y'all know how I like to kick off the show. I like to kick off the show with fun facts. It's something interesting. A lot of people like to say those are icebreakers. Call it what you want to call it. I'm calling it fun facts. So, now we all know the usual names. Like, we refer to Vegas as the city with no clocks. We refer to Chicago as the Windy City. We refer to New York as the Big Apple. So, we know all of this, right? So I was wondering if it was just only certain states that had that, or was it all the states that had nicknames, or how did they get the names that they're known for? And guess what? We are not the only ones. Wow. And I should know better, right? So let's jump into that. We're going to talk about the states and their nicknames, right? So the first thing I'm gonna jump off with is Maine. Like, you never hear too many people talk about Maine. To me, I didn't even know it was for real on the map. So, because it's so small, like, you never hear people talk about Maine. However, Maine is known for the pine tree state. So when I found that out, I started thinking about pine sol because, like, I wouldn't think about nothing else but something to clean with because pine sol smell real good, right? But let me tell you about how it got the nickname the Pine Tree State. Because in the vast historic and forests, and in the forests back in the 90s, not 1990, but the 1900s, a land covered in trees primarily was for the eastern western white pine. And so when I looked that up, it was so pretty. Oh my God, it was big and pretty and it was white. Oh, it was nice. Okay, so now this iconic, tall, and resilient tree, often reaching 200 plus feet, has been the central to Maine's identity, lumber industry, and history since colonial times. So, like, when I thought about that, 200 feet, I wonder how long would it take a person to climb that tree? Because you got people that mountain climb and rock climb. So, like, I wonder how long would it take someone to climb that tree, right? Now, the state nickname reflects the status of the most heavily wooded state in the U.S. Never knew that. I never knew, would not have ever imagined that Maine would have been heavily wooded. Not at all. Not by any stretch of the imagination. So let's talk about New Hampshire. They call that the granite state. I'd have never thought that. Like, why? And of course, when you think of granite, you think of the tile, just so perfect, right? Because granite is, oh my God, it's so nice. And the countertops, and oh yeah. And how you shine it when you wipe it. Okay. Now, so it's called the granite state because of its extensive high quality granite bedrock, the quarries, and the mountains formations. Wow. Now, granite quarrying became a major industry in the early 19th century. So that means it's been a while. It's been around for a while, which is great because, man, can you imagine? Like, I thought of having like my own wall put in my bedroom, and I did want granite. I did. So just think about having like a granite wall, just yours in your bedroom, or maybe that's just me. I don't know. I'm crazy like that. Now let's go to North Dakota. They call that the Peace Garden State. I would have never pictured North Dakota as the Peace Garden State. Now, I didn't know that much about it, so I'm thinking peace. Maybe that's a peaceful city, tranquility, just somewhere to go to get your mindset to recenter and reset. So, to honor the International Peace Garden that's located in its border of Manitoba, Canada. And I think I'm pronouncing that right. If I'm not, please forgive me, but I tried like 7 times. Now, also, it serves as a tribute to the long-lasting peace and friendship between Canada and the United States. I never knew that North Dakota held this central piece that kept peace in between Canada and the United States. Like, that was really fascinating to me. I actually got it on my to-do list to do a little bit more research about that because it's interesting. Now, outside of that, the garden has features like a peace chapel and a bell tower, and it has a 9/11 memorial. Like, that's just fascinating and awesome. Now we're going to talk about, last but not least, Pennsylvania, the Keystone State. Now, this took me by surprise all the way. Pennsylvania? Like, no, but yes. So, because it's the central 7th colony among the original 13 physical acting like the wide-shaped stone, which means there's a keystone shape and an arch that holds the structure together. I went and looked that up, and it's a keystone. It's a keystone. I think it's interesting. Now, the state was a leader in developing coal, iron, and steel, which were vital to the nation's infrastructure. Now, Pennsylvania was vital in the American Revolution, and the early nation hosting and singing the Declaration of Independence from the U.S. Constitution. Man, you know what? I would have loved to have been there back in those times just to see that. Talk about historical memories. So, man, like, now I can't wait to find out what every other state nickname is and what it's for. But I just wanted to share those fun facts with you. And, if you got some fun facts, drop them in the comments. I would love to read them and see them. So, jumping into our announcements, because I always have them. And I know this is going to sound strange because I didn't start it, and I didn't start it for a reason. But tomorrow is March 15th, which is a corporation deadline. So if you're on a corporation return, your tax return is due tomorrow. If you do not file your tax return tomorrow, which would actually be due on Monday, don't fret. you're going to be receiving an extension 7004, whether you do it on your own or whether you have an accountant that does it for you. So it'll solely be at your discretion. So please don't take that lightly, that those returns need to be submitted. They need to be filed. If not, at least do the extension. Now, amended returns also for the IRS are being accepted. Yes, amended returns already for tax year 2025 are being accepted. Again, it's so crucial that you have those IRS ID Me accounts open, because if those IRS ID Me accounts are open, let's just say you have an identity protection PIN number, you would be able to go in there and get that PIN number. Sometimes you forget about that PIN number, so make it best practice to check and get that PIN number so your return doesn't get rejected, okay? Now, it's about that time, y'all. Let's Talk Finance is coming up on a 1-year anniversary. Where did 12 months go? Like, OMG, I'm so excited and geeked about that. We got a lot of things coming out for the anniversary. We're going to make this a 1-year big event. Some information is going to be sent out to you on social media. Like, get ready to have a good time. We're going to have some promotions going on, some giveaways. Like, we celebrating this 1 year for Let's Talk Finance. Like, I've been talking for 12 whole months. 12 whole months I've been doing this. So that is a big, big milestone and a big accomplishment. What started for good ended bad, but turned around immaculate. And I have so many supporters to thank for that. So yeah, so we finna do it big. Let's Talk Finance. So get ready. I'm gonna be sending out that information. Want to go on into my birthday wishes for the month of March. For anybody that's celebrating a birthday, anybody, please celebrate and be safe. Do it in decency and in order. Also, I like birthday cake. Yes, buttercream icing. Yes, please. So I got a special birthday today, actually. Miss K, everybody knows I love Miss K Pendleton Quick Tax, my girl. We talk so often. We do so many things together in the business world and personally. Like, she's in Arizona turning up. Get it, girl. Happy birthday. Enjoy yourself. Another good friend of mine, Honeybee, her birthday is coming on the 19th, which is actually Thursday. My son, all the way in Jamaica, T.O., my baby's birthday is going to be on Saturday the 21st. He'll be 28. And my other bestie, Neil, she's coming on the 22nd of this month. And see, here's the thing. I know y'all listening, and all of y'all know I love birthday cake, so I better get some birthday cake. And you cannot forget the most awesome, most greatest, most spectacular birthday that's coming. That's going to be March 28th, and that's Cake's baby Abby, my baby niece. And she's not a baby, but she's always a baby when it comes to me. But all my nieces are, for real. So, yeah, that's just that. And I got some nieces. You hear me? All of them. Because they my nieces, right? Right. So, why they can't be my babies too, right? Right. Okay. So, now, updates. I know some people have not gotten their W-2s for whatever reasons, whether you move, whether, you have a problem with the mail, etc. Those transcripts are starting to be available. Log into that IRS account and download those transcripts. You're going to need them to file your tax return. So please comment, love, like, share, and subscribe to our YouTube channel. Before I go any further, I just seen Miss K. Come on, happy birthday, boo. Hey! Now, make sure you go to FedEx tomorrow and ship me my piece of birthday cake. Don't play with me, because I will come to Arizona for my birthday cake. And you already know I love birthday cake. But happy birthday, sweetie. Turn up. Have a good time. Do it in decency and in order. And I'm going to go and jump into our amazing show. Yes, our amazing show. So everybody, thank you for tuning in. Thank you for joining Let's Talk Finance podcast. And if you're new here, welcome to the family. I just love adding people to the family because I just love family. You know, here on Let's Talk Finance, we break down your finances with clarity. We break down your finances using faith and empowerment. And the reason we do that is because we want you to understand your finances. We want you to understand your money is not just numbers. We want it to be aligned and we want it to have a purpose. And that purpose is you. And speaking of that, our conversation for today is actually talking about profit with a purpose. You know, how to grow your business without overspending, how to grow your business without burning through your cash flow. And don't be surprised, don't be mistaken. A lot of entrepreneurs, they they go through this crisis. Even individuals go through this crisis, and it's okay. It exists as long as you find a way to manage it, as long as you find a way to get out of it, and as long as when you get out of that situation, you learn from that mistake. And now we call that reinvesting into yourself and into your business. That's what we talk about. Now, just some points of discussion that we're going to go into, and it's going to be about exploring the signs of business money management. What needs to be improved? How do you analyze your expenses better? How do you invest? What are some smart strategies to keep money in your pocket? And another good one that we're going to touch bases on is how to identify which client or service actually is profitable in your business. And you know, that one touches home for me for so many reasons because I just want to help everybody. I don't care who it is. And you know, I tell people when I get in my business card, I'm an accountant. Here you go, reach out to me. And they say, well, what I need an accountant for, I'm only at 20,000 a year. Show me where it says that you cannot have an accountant making 20,000 a year. That's when you want to have an accountant, because if you can get your finances in order now and you don't think it's that much, just imagine what can happen when it does grow and you have an accountant or a financial department or office behind you. So here's what I want you to think about, and here's what we're going to jump into, right? There's 5 signs that business money management needs to be improved. And we don't have to look at this just on the business side. We can look at this personally as well. And guess what? Let's just say you want to start a business. Let's say you're thinking about starting a business. Yo, this is the blueprint. All this information I'm giving you is not just research information. This is facts. This is what I have been through. This is what I have witnessed working in corporate America and working with small businesses. I actually went through some of this myself. So I'm able to deliver that information to you. And I'm able to be honest, I'm able to keep it a buck because I done been through it. It's no reason to sugarcoat it and act like it's peaches and cream. No, I think just about 3 weeks ago on the show, I said, if you are an entrepreneur, you treat your business as your kid. And as this is your child, it makes you cry. It makes you laugh. It makes you spend money. It make you go broke. It make you want to throw in the towel. And some days it make you just want to jump up and down. You go through all of those emotions. But when you're looking at the money management side, now you have to figure out where is the improvement needed. You have to adjust somewhere. And that's not just in business, that's personal too. Because money come in and money goes out. But are you staying afloat? Are you plateauing? Are you profiting? Do you know where your business stands? And if you don't, that's a sign right there. That's a sign that help is needed. So let's talk about how revenue is increasing, but your profit is not increasing. And that's true. Your revenue can be going up daily. But if you're not profiting off making that revenue, you're on a hamster wheel. You're just going and going and going. And what do I mean by that? So let's talk about when your revenue increases, right? Your income goes up automatically, which means that your financial stability is going to go up just as high. Now, why do I say that? Because 9 times out of 10, if we get a bonus, if we get a raise, we automatically think about spending. We don't sit and we don't do a profit and loss of our expenses. We don't see what we can exclude. So therefore, we're not profiting. We're spending before we actually get it. How do we do that? Because we see with our eyes and we see for right now. We're not seeing for the future, which means we have to stop and we have to pause. We have to break down what our bigger picture is. And believe it or not, that's where them SMART goals are going to come in at. Do you need it right now? Is it measurable? Is it attainable? You know what I'm saying? Is it reliable, realistic? Is it time bound? That's where those come in at. So as your income is growing, you want your profit to grow just as harder. And you have to set that goal. You have to set a target goal. How do you know if you're going to meet it if you don't set it? Also, the second sign is you don't do review reports regularly. We get caught up with time. We get caught up with our house life. We get caught up with everybody else's life. We get caught up with our 9 to 5s. And sometimes there's going to be a disconnect somewhere. And that disconnect may fall on your friendship, on your relationship, even on your business. Because what you say, you know what, I ain't going to do it now. I'll get to it later. Then later comes and you still don't get to it. So now you're still behind. So you're not profiting. You're at a standstill. Although it sounds good because that's what you see and that's your goal, but you're not working toward it because it's a disconnect, because we got so much other things going on. We haven't prioritized. We haven't did the needs, the wants, and the I can deal with laters. Now, believe it or not, many business owners only look at the bank balances. What is my balance right now? No, you need to look at deposits. You need to look at every transaction that hit that bank statement. Also, you need to reconcile that bank statement, because what you may see now in 30 minutes, it may be something different. Again, how many times have you forgotten about something that was out and you spent that money and didn't balance your checkbook? Now you're sitting there with an NSF fee, or you're trying to put that money back so you don't get a fee. You have to balance and know what's supposed to be in the bank, because banks make errors. It's data entry. Technology makes errors. Everything is not bulletproof. It's nothing wrong with a second set of eyes. Period. Now, you have to schedule those financial days where you sit and you say, I'm going to delegate this day to looking at my revenue and my expenses. Then I'm going to take some time and go over my profit margins and look at my cash flow, because I need to know where my money is going. I need to know if it's making me a profit, or am I just spending this money and it's not doing anything? I need to know if I need to make adjustments. I need to know how my profit margins look. Where am I supposed to be? Because I didn't set a targeted goal and I need to hit that goal. So if it's something that's not aligning right now, then I need to make those necessary adjustments. Water time. Thank you. Now, another thing is you have business expenses that are unclear and disorganized, meaning you have expenses, you don't know why you got them. You don't understand what it's doing for the business. You don't know where the money is going. You don't know if it's profiting. That's not good. You have to know where everything is going. That's why it's okay for you to set those check-ins with your account and your preparer. Your business is only gonna matter as much as you make it matter. If you're in business just to say you got a business, then of course you're not gonna take this seriously. But if you're in business to make money, to have residual income, to leave a legacy, to have generational wealth, then these conversations are for you. These are your blueprints. Wait, these are your free blueprints. And I'm telling you, it's going to help you and it's going to get you where you need to be. You just have to start. You have to get out of that mindset of I'll take care of it later, or I'll just talk to my tax person at tax time. No, it's too late then. Talk to us before so we can get the issue fixed. Now, when it comes to your expenses, instead of trying to put them all together, you need to know and have your expenses categorized. The first category should be your fixed expenses. What is a fixed expense? It is a predictable recurring cost that remains roughly the same amount each pay period, which may mean your rent is the same amount, your cell phone bill is the same amount, your car note is the same amount, your insurance is the same amount. So those payments are going to be due monthly, quarterly, or annually. It's going to stay because you're fixed and you're locked in to that amount. Your other set of receipts should go to variable expenses. What is a variable expense? It's a cost that changes frequently. So, light bill, gas bill, groceries, gas, all of that changes frequently. Like I remember when you used to be able to go to the pump with $3. That'll take you 2 days. You go to the pump with $3, the pump gonna laugh at you. I'm just saying, yeah. Then you have growth investments. Now, what do I mean by growth investments? When you're growth investing, that means you're strategically focused on capital appreciation. And what does that mean? You're purchasing stock for the company because you want it to grow. You have earnings, you have market shares. You're putting yourself out there more to receive more flows of income. That's what you're doing. You're making investments, strategizing. Now, what you don't want to do is unnecessary spending, which is non-essential expenditures, meaning you don't need them, meaning subscriptions if you're not using. You're spending just because, oh, I got it. I made this money today. Why not do it? Now, I'm never saying don't treat yourself in the business, because it's okay to celebrate your wins, but it's also okay to save that money for a bigger win. You want to look at the bigger picture overall. Now, you want to know how your cash flow feels. You don't want that to always be unpredictable, because again, that's why you have your cash flow statements, so you can know what is going out. You know where every dollar is allocated to. That's straight to the point. That's a standstill. And you want to stand by that. You want to make sure that your money is working for you. That's what you want to see. Now, here's my question for you. Did you know profitable business can fail due to poor cash flow? Like, you can be $1 billion industry, but if that cash flow wasn't right, if the budgets weren't right, if we can go all the way back. Let's start with the chart of accounts. Let's start with booking our expenses. Let's start with categorizing what I just said, your variable expenses, your fixed expenses. Like, all of these small, what some people may consider not important items, are very big over an amount of time, because now you done put all the work in, now you done invested all this income, but you're not seeing nothing. And now it's like, oh, I just want to throw in the towel. So now the business closed. And why? Because they only waited once a year to talk to their accountant. They only waited once a year to talk to their tax preparer. They only waited once a year and said they were going to do better, but something else came along and it didn't happen. So here's what you want to do. You want to create a 90-day cash flow projection. Revisit it every 90 days. And again, if you don't see that adjustment, then you readjust somewhere. That's where you sit down and you put your financial cap on and you say, hey, look, I need to have a meeting. We need to figure this out because something ain't working. This math ain't mathing. And it's okay to do that. I promise you it's okay. Now, here is what I think is going to be so essential, especially when you're implementing your cash flow. You want to remember that productive investment equals a strengthening foundation. So invest in your company because it's yours. Invest strategically because it's yours. You have to make it make sense to you. You have to write it down. So listen to this. Efficient enhancement seeks improvement. And that's what you want to do. You want to be efficient and enhance what it is that you're doing so you can see that improvement. That's what you want. Improvement. Again, remember, this is your child. Your business is only going to put out what you put in. If you don't put nothing in, nothing is going to come out. If you put little in, a little is only going to come out. And so with that, I have a question for my listeners. What is one expense in your business or your personal life that you haven't reviewed in the last 6 months? One expense. I'll go first. My gym membership. Nope, I have not. And it's been longer than 6 months. And when I realized I was going to ask that question today, that made me go look. And surprisingly, my membership is not $12.99 no more. It is actually $21.97. And I have nobody to fault but myself. Again, because it's so little, and I talked about this last week. Throw it to the side, I'll get to it later. But that's one expense. When it comes to my business expenses, I'm looking at them every day. Every day. I'm taking a glance at them. When I'm sitting down going over them, I'm making that a quarterly thing. And me and my business project manager sit down and we go over the books. And if something is not aligned, you better believe we're going to find it. I'm not going to rest until I find it. And if I don't find it, everybody going crazy because I'm going to run everybody crazy until I find it. So think about that. What is one expense that you have not reviewed in the last 6 months? And while you're thinking about that, let's talk about smart tax saving strategies for small businesses. Yes, it's tax strategies out here for everybody. They may not be ideal how we want them to be, but there's things that could help small businesses. And let's talk about it. The first thing you can do is do strategic tax planning versus last minute tax planning. Last minute is you're due March 15th, but you want to come in March 10th and you want a miracle. No, you should be planning throughout the year. Every quarter or semi-annually, you need to be having those appointments with your accountants and your tax preparers. You want to plan throughout the year, not only during tax season. If you feel like you need a weekly appointment, a monthly appointment, a quarterly appointment, set that up. Schedule that appointment. Now, also, you want to maximize your business deductions. And how do you do that? First, you want to find out what you're able to deduct. Because you don't want to just listen to what your friends say. Not that your friend is telling you anything wrong, but your tax situation is different from your friend's tax situation. And again, your friend may have knowledge about this, but if you got somebody dealing with your finances, you want them to be credentialed in this. Because if something happens, you can't blame your friend. You're going to want to put the fault on somebody. And even in putting the fault on somebody, You want to know that they're going to be able to handle that situation and explain to you what that issue was. That's just like if my friend told me, friend, I know you like to play with colors. I think you should mix orange, brown, green, red, black, and navy blue together, and it's going to come out turquoise. Knowing that I should talk to my stylist about this, but since my friend told me this and ain't going to tell me nothing wrong, I done listen to my friend. Now my hair, I don't know what color it is, and my stylist mad at me and laughing at me. But even though I'm mad I did it, and I fuss at my stylist, she's able to tell me, well, first of all, you don't need to mix all them colors together like that. Secondly, you got too many dominant colors. Thirdly, why didn't you just come to me anyway? Fourthly, now we're going to have to let this grow out, so you got to be mad at yourself. That's how that conversation going to go. But because she was able to explain it to me, I can't be mad at nobody but myself. We need to do the same thing when it comes to our business. So some of them deductions for small business owners is if you work out of your house, you got your home office deduction, you got your business travel. What if you purchased equipment, education and training? That goes toward your business. It's a part of you. Now, you also want to work with a finance professional. Get out of the habit, like I just said, of talking to your friend or your cousin, because again, if they're not in this area of expertise, it's not going to work for you. You need to talk to that professional. And that's not taking anything away from your friend or your family member. But again, this is your business. These are your finances. Do you want anyone just working on it and giving you advice? Because what may work for them may not work for you. It may not. And that's just how the tables turn. Water break. In doing that, while you're meeting with a professional, they can review and identify what's missing, what's not there. They can tell you what misdeductions happen. They can tell you about inefficient spending. They can tell you better strategies and how to keep your money flowing. They can help you with your projections. They can help you with your estimated payments. They can explain why you're paying these estimated payments and why it is the way that it is. So let me ask you this. How do you review your financial reports? Should it be monthly, quarterly, or only during tax season? And when you feel you know the right answer, then do the right answer and don't do the wrong answer. You'd be surprised. It will help. I'm going to take a moment and acknowledge my guests because I love all my people. Hey, my sister on here, y'all. Hey, Vanita. That's my sister, y'all. I love her. My niece, the beautiful Bam. Hey, baby. Miss K, got the birthday girl on here. You know you good when you're spending your birthday with me, and I know she better give me some birthday cake. Hey, Joy. Hey. Oh, she said, sorry, I can't tune in. I'm out. I love you. I will share on your timeline. Thank you for the love. Thank you just for tuning in. And anybody who's watching now, who's watching later, who's going to watch 199 times, I appreciate the love. I appreciate the support. Yes, please share the content. It is so needed. You just never know who's going to need this information. Vanita said she's no kin. She's no kin to me. So I got proof that we related. I got proof. And if y'all want to see the proof, I'll show y'all the proof. Hey, that was a good one, Vanita. I needed though. That was a good one. You see why we have fun on Let's Talk Finance, and it's about your finances. Now, here's another big one that a lot of small businesses and even individuals miss. Managing business expenses to increase return on investments. You want to see a return on your investment. If I spend this much money, how much money am I going to get back? Is it going to be worth it? Am I going to profit off this? You want to know what your return of investment is going to be. If there's no return of investment and you're just spending money because you got money or you just don't care where it's going, I'm going to give you my phone number and you can reach out to me and I'll help you with that. Now, what you want to do is conduct a self-audit. Again, review those subscriptions that you have. And yes, businesses have subscription. Yes, they're a high target out here for subscriptions. Everyone wants you to pay a fee, and they don't want you to do it monthly. They want you to do it annually. So that's the difference. And they'll tack on maybe a 10 to 15% off discount for you doing that. So yes, businesses get caught up too. Manage your market spending. How much are you spending on marketing? Is it bringing you that profit? Do you see a return on it? If you don't, maybe you need to try marketing another way. Every way is not going to work for you. Look at your vendor contracts. That's important. Know your operational costs. Know what they are. Know what you're spending your money on. Then in return, you want to evaluate everything that's going on with your investments. You have to evaluate that. When I tell you, y'all, that's just so important. Like, you don't even understand the extent of how important that is to just evaluate, like, where your money is going. Like, how do you not know where your money is going? Like, and you'd be surprised. You would be surprised that when you sit down and you do these self audits and you do these self checks and you say, wow, I didn't know the money was going there. I didn't know that I wasn't getting this money, or I didn't know that I was spending endlessly like this. Wow, I didn't know I was paying this. I didn't know that I was paying that. Yeah, you'd be surprised. So you want to get into the habit of knowing where all of that money is going. So you want to ask yourself, is this expense an expense that I need to have? Can I take on this expense? Is it improving what is set forth for it to be improved? Meaning, if I don't need it, then I'm spending this money endlessly. Now we want to talk about being operational and looking at our operational costs. That's going to come with payroll. That's going to come with utilities. That's going to come with softwares. What are we spending this money on? Is it benefiting us? Is it helping us? Are we using this strategically? Like, these questions are so valid and so important. And you have to get into routine of just asking yourself that question when it comes to anything you're spending your money on, especially when you're budgeting. Because if it's not in the budget and you don't even have a budget, again, that takes me back to, are you profiting? That goes all the way back to you making all this money, but you don't know if you're profiting, if you're losing, or if you're plateauing, because you see so much money coming in, yet you see so much money going out. Picture it like your check stub. You can tell a person, well, oh, you made $260,000 a year. No, I didn't. Yes, you did. I'm looking at it right here. I ain't make that money where it's at. I don't even have to go that high. I can go with 50,000 a year. You tell the person they making 50,000 a year, they want to get up and slap you, because it's like, that ain't what I brought home. Doesn't matter what you brought home. The W-2 says you made this. So now we could even start with deductions. What are you having deducted out of your pay stub? Because that counts, whether it's pre-tax or not. And now we're looking at your net pay. Now we're going to take your net pay and we're going to go and look at all your expenses. What are you paying? Again, here go that 50, 30, 20 rule, or that 60, 20, 10 rule, and 10, however you want to split it, there it goes. How are you allocating your money and your expenses? Then you're going to be able to see if you're plateauing, if you're profiting. You always want to know where you are. You don't want to just sit there endlessly and not know. Because again, remember, as I said last week, you're never in the room with all of these officials when your business is being conducted. What's in the room is your documents. Your documents speak volumes. They talk loud, and you don't want to give them any reason not to look at you. You don't want to give them any reason to try to deny you. So, since you have the blueprint, you can start from the foundation and start making your funds being aligned with all your purposes. That's so important. Let me ask you a question. Whether you're a business owner or a civilian, if you had an extra $10,000 today, would you reinvest it in your business? Would you reinvest it in yourself? If not, where would you invest it at and why? I know if I had an extra 10,000, honestly, the first thing I want to do is pay my tithes. And then I always talk about celebrating the small wins. I haven't celebrated in so long. I really want that ninja that make ice cream and slushies. I would get that. And then whatever was left, I'm going to reinvest that in my business, because my business is a product of me. And that means I'm going to reinvest in technology and software. I'm going to go to my IT department. Look, this is what I have. This is what I think we need. This is what we've talked about in meetings. I think we have that cash flow. Here is what we're working with. Because now I'm thinking ahead of the game. I'm thinking about how the business is going to be able to function, whether I like to remain old school or not. So just think about that. If you had that extra 10,000, what would you do with it? What would you do with it? Seriously. How would you invest it? And if you wouldn't invest it, why? You have to, again, remember that your business is always going to be a product of you. Your business is going to put out what you put out. The more you work, the more you're going to see your growth. The more you plan, not only are you building that relationship with your financial planner, your accountant, your financial advisor, they're also helping you. And now, don't get me wrong, it's going to be some times you're going to bump heads and you're not going to agree. You're not, because you just don't want to do it. Or they see what you don't see. They see the bigger picture and beyond, but you're just looking at the right now. And you're putting them emotions. Remember, we talked about that last week, those emotional barriers. We're putting that, and that's stopping us. Whereas they're on the outside and they're looking at the bigger picture. And so now you're mad. You want to pack up your stuff and leave and go somewhere else. You don't want to do that. You want to stay with that same individual. Even if you bump heads, it's okay to say, you know what, right now, I don't agree with you. So you know what? We both need to take some air. Let's revisit this in about a week. Maybe I'm not seeing what you're seeing. Maybe it's a disconnect somewhere. So let's just take a moment. Let's take a breather. Let's walk away. Let's come back to it. Come back with fresh eyes. Come back with a fresh blueprint. Because then it'll make more sense, because now you didn't have time to think about it and you're not in your feelings anymore. You're not endlessly spending. Now you see that bigger picture that was ahead of you. And it's okay to do that. Trust me, it's okay. It's a relationship. Again, all relationships are not perfect. So, and this is your finances. Again, when you're talking about your money and your finances, that's a touchy situation. Hey, man, don't play with my money, man. Now you're mad. Now all professionalism has went out the window, because that's a touchy subject. That's why it's okay, because you're in that relationship. You have that relationship, so that person sees what you don't see, because they don't have that blinder on. you have it on. Remember, I said get an accountability partner. It helps someone you can talk to, someone that's going to tell you the truth. Again, I go to my business manager, my business project manager, like it's her business. Sometimes I feel like I'm checking in with her, but I need that unbiased ear. I need that unbiased decision. I need that, Shavonna, look, now, no, you not finna do this. Cause for what? And then I get mad. Okay, well, you just don't understand my point. Forget you. And then I hang up and get mad. And that's fine. But after I done calmed down and I done looked at the bigger picture, you know what? I was wrong for that. Let me tell you what I was looking at. Not to say that the ideal was wrong, but let me tell you what I saw. Maybe we could incorporate or adjust some things so it can work out for the better. And it's okay to do that. So, people, I'm giving you the blueprint. I'm giving you what I wish was given to me. And unfortunately, that left a long time ago. Don't know where it went. Wish somebody could have given it to me, when I was in school, when I was going through all this. I really wish I had this, because I promise you, I would have done a lot of things differently. I would have done so many things differently. So listen, here's your blueprint. Again, whether you're a business or an individual, conduct monthly financial reviews. Know where your money is at. Know where it's going. I had a client come tell me earlier this week, hey, Shavonna, I ain't want to do it, but, I listened to you. I did. Now I got a down payment on a brand new car just off my tips because what you told me to do. Whoa. Wow, I didn't know you did that. No, I ain't want to tell nobody because I wanted to see if I could do it, but I listened to you. So, thank you. I'm going to try to keep doing it that way. Do that. And that made me feel good because somebody listened and they see the fruits of their labor. And that's what you want people to see. So conduct that financial review. Perform quarterly audits. Look at all your expenses. Do you need this expense? See what you could alleviate. See what you don't need. See what's a waste. Identify 3 most profitable services or clients. What are you profiting most at? Is it this company using this product and using this product and using that product? Or if I go here, I can get the product and I can get the service. Is it going to make sense? Is it going to align up with what I'm doing? I'm just making adjustments now. And now I think that this is going to work. Then after that, you want to eliminate low profit activities. If it's not making you no money and you're spending money, at some point you got to stop. And this is personal too. Develop a reinvestment plan. You want something to spend your money on? Spend it on your business and reinvesting. I promise you, you will see the bigger picture after you start seeing your purpose. How are you going to see your purpose? You're going to write it down because that's your vision. How are you going to see your purpose? Because you're going to put those SMART goals to your purpose. You got motivation. You have reason behind it. You want to make this. You have a time frame. You're trying to do this in so little time. So this is what you're giving yourself. Allow yourself that grace. Allow yourself that time. Grow. Find those issues and you'd be surprised what you see. When you sit down with your financial advisor, your tax accountant, they're able to point out what you don't see. Here's not what I'm looking at. I can't see it. Where you're not looking at it from that perspective. Remember, you want to look at things from an octagon's perspective. That's 8 different angles. You want to see the bigger picture. Listen, my family, I love y'all so much. Let's talk finance. I want you, if you don't take away nothing else from this show today, I need you to take away these concepts right here and try to incorporate them. Your revenue growth means nothing without profit management. You can have all the revenue in the world, but if you're not profiting, if it's not being managed, you just might as well open the window and let it flow out the window. You might as well. You have to understand where your money goes. And the only way you're going to understand that is having control of it. You have to know where every dollar goes. That's called protection. That's called safety. That's called reliable. That's called cash flow. Now, another takeaway is tax planning should happen, again, year round, not just during tax time. You don't want to ask questions when you don't see a refund. If you see a refund or don't see one, you want to ask questions. You want to know what sits on your tax return. You want to know what this means. Doesn't mean you have to be an expert in it, but you want to know about you. It's important that you be nosy about you, because nobody is. They going to know and try to figure out everything. They going to come up with their own story. It's going to be wrong. And then what? No. Be nosy about you. Find out what's going on with you. And any person you sit down with and you spend your money with, if they can explain to you and answer your questions or give you a turnaround time when they can, you politely take your paperwork and you go somewhere else. You go somewhere else, because that's not fair to you as the small business owner or client. Now, you want to be strategic when you invest back into your business. You want to be very strategic about that. Got to have a plan. You have to. And that's going to take some planning for you to sit down. That's going to take them hard conversations with you and your accountant or your tax advisor, whomever it is that sees your plan and that wants to help you. Now, we're about to close the show, and then closing the show, listen, I want you to know that, and I had to learn this, and guess what? I'm still learning this. Even as an entrepreneur, I'm still learning this. Like, growing a successful business is not just about making money. And I thought that's all that it was. I'm going to make all this money and be rich. No, it's so much more to that. It's about managing money with intention. First of all, you got to know how to manage it. Then you got to have good intention behind managing what it is that you have. That's a lot in itself. That's a job right there. That ain't even got to being a business owner. When you understand how your cash flow works, when you're able to control your expenses, when you're able to plan your taxes and your reviews with your accountant, when you're able to think things out wisely and put those emotional barriers aside, then you will be able to move with purpose, you and your business. When your finances are in alignment with your vision, with your growth, it's more predictable and it's more profitable because you've put that time in it. Listen, before we leave, I just want to thank all of y'all for tuning in and spending time with me. I know I gave y'all a lot of information. I want to leave y'all with share the content. And again, if you're new and you're sharing this content, screenshot that information, reach out to me. You will get 15% off your service. If you are returning and sharing this information, screenshot it, send it to me. You will be getting 10% off of your services. Please love, like, share, and comment on the content. We love the feedback, whether good, bad, and or indifferent. Let us know what you're thinking. You matter to us. We sit at our table and we have conversations. I'm on all social media platforms under Anointed Accounting, ANOINTEDACCOUNTING. My number is 312-837-7219. My website is www.anointedaccount.com. I practiced that. I had to get that one in. Ooh! So listen, y'all. Thank y'all for staying with me today. Thank y'all for kicking it with Shavonna, because y'all love me. Until next time, I want you to remain encouraged, stay grateful, and keep walking in purpose. Peace.